deepest truth about yourself. All the things you think is wrong is just a doorway to the discovery of your strength.
All right, guys, what is going on? What is good? What is good? Welcome, welcome. Hope you guys are blessed. It is Wall Street Wednesday, June 12th, 2024. And things are about to get pretty hectic for the afternoon. Things are probably going to get wild for the afternoon. What's good, Felix, Naruto, Alex C, Toby, Hatham, Nina, Natasha, Willow, Marshall, Infinity, Libright. I don't know why YouTube doesn't send me your notifications anymore. They don't put you on the first page either. That's fucked. I don't know. You know what? Let me see. see. Let me see. I don't know why either. Nothing has changed in the settings. Maybe YouTube heard some of my language and decided not to. I don't know. Maybe I got shadow banned. I don't know. I do not know, my friend. It's out of my control, so I ain't worried about it. I'm not too worried about it. JVFX Capital said, John, only teaching the real stuff. Oh, yeah. I try. I do my best. I do my best. What's good? Lucas, Vadu, Hermida, Miguel, Maximiliano. Willow gets notifications. Nice. Yeah, the camo bucket hat came back today. I've had it for a long time. Finally brought it back, you know? Try unsubscribing and then resubscribing. Wow, Cameron. Losing subscribers now, huh? Telling everybody to unsubscribe. Didn't we ban Cameron? How did he get back? How did Cameron get back, bro? Who let him back in? We need answers. We need answers. What's good, G? Hermita says, I've got the notifications and you're on the first page. I'm gonna be creamy with you, all right? The first page is tailored to the individual. So the way YouTube works is whatever you watch or the type of content that you watch, YouTube is going to push more of that onto your front page. So if you watch cat videos, not that I do that, but if you ever did do that, you would start to see more cat videos pop up on your main page. Okay. In theory. What's good, Sean? What's good, 2020? We got almost 40 people on here. Yeah, drop a like for me. Drop a like on the stream. Still haven't fixed my stream deck. Oh, well. I wasn't going to restart my computer just for that. But yeah, drop a like if you could. We will go over a few things. We might have a little bit of a longer stream. It depends if you guys want to stay here long enough for the actual meeting minutes, the press conference that's 30 minutes after the Fed funds rate, which is in about 50 minutes at the top of the hour. So I guess it just depends on what you guys want to do. It don't bother me, whatever we do. All right, so let's go over a few things. What's good, Nikki? What happened to your sniper? Where'd it go? What the fuck? What is going on, Nikki? Did you cancel your subscription already? Damn. We got people unsubscribing. We got people canceling memberships. Golly, am I that fucking bad? You get the bias wrong one fucking time. Everybody's like, oh, this guy sucks. Well, fucking sorry. You know, it's not like New Zealand didn't smack today. I mean, fuck, I fucking gave that to you. Right? New Zealand, where's she at? 62.18. I wonder if that's what we've been looking for or not. I don't know. I mean, it might be. You know, we'll start with that. Since you guys want to give me all your shit today. You guys just hate me. I don't know. I don't know why. It's cool. It's fine. We'll deal with it. What's good, Edgar? Oh, issues with the debit card? It's all good. It's fine. CPI this morning for the US dollar. Remember, I'm in Central Time. So if you're Eastern, you would add an hour. So this was 8:30 a.m. Eastern. for me, it's central, right? So we had CPI, we'll go over that. And then this is what's coming up for this afternoon. So in about 50 minutes, we have the Fed funds rate, FOMC statement, and then 30 minutes after that, we have that press conference. That I'm pretty sure is where Powell's going to come out and talk a bunch of shit. And I'm sure the markets are probably going to move a lot this afternoon. Okay. And then tonight, in the evening time for Asia, I believe that is, we have unemployment rate for Australian dollar. So we might see some more shake and bake over in Aussie. Okay. So if New Zealand, we had been bullish on, personally, I screenshotted May 3rd or May 4th. It was the 4th because that was a Saturday, I think it was. So I had screenshot. I posted that in the Discord. I posted that on my Facebook, and I posted that on Twitter, where I was actually expecting for us to trade through the April 9th candle and then trade back into it to go higher. That's what I was expecting. But that was a month and a half, or it was like 5 weeks ago. So we didn't get that, but we did end up getting some signatures of bullish price action in here, and I'll go over that too. Yeah, Capital. I'm glad you asked that. I am working on my second book still. I have been heavily unorganized the last like 2 years in that regard. So I mean, it's disgusting. I have like 20 notebooks. I've got index cards out the ass. I've got journals. I mean, I'm so disorganized, it's ridiculous. So I got with Notion about 3 weeks ago, maybe 4 weeks ago, and Notion has been able to really help out with organizing everything. So I'm still working on it, and I'm not going to promise I'll be done this year, but I am going to work heavily towards having it done and completed by December. So yes, I am working on it. I just was retarded with keeping up with everything, and that's on me. So but I'm pretty sure it'll be worth the wait. I'm doing my best here. All right. Do you see any important imbalances or mitigations near the $2,000 mark on gold where the market could get back to make its big up move? I don't know. I think silver's up today, which is cool, but I'm not super excited about the metals today. So where was I going with this? Australian dollar. If we are fairly bullish for New Zealand, we have been for, I don't know when I introduced that level to you. It was weeks ago, probably. The Australian dollar should likely follow suit, and we do see that today. So what was the upside for Australian dollar? Honestly, I don't know. Other than these low resistant highs here at 66.84. All right, so you see that. We easily traded up there. And that's actually a very classic definition of low resistant highs. How little resistance there was to just trade right up there for the news. And a lot of people say, oh, well, don't trade before, CPI or whatever. I mean, you can do whatever you want, but the bias was bullish for New Zealand, and there it is, right? So having that, right, upside for Aussie, upside for New Zealand, right, and it went to the 20 level and it gave that back, which is not surprising after an 80 pip run. It's allowed to do that. With upside for New Zealand, upside for Aussie, okay, what do you remember from earlier this week that we talked about on dollar? One of the scenarios I gave you was in here. I was saying we might trade lower and then, run down to these lows and then possibly take April's low. That was one of the scenarios, right? If we go to the daily, right, what was the That was either Monday or Tuesday, or maybe both. I don't remember specifically though. But we talked about how it traded above May 29th's high, and that could be a stop run to go lower, right? That was a scenario. And that's what we got. Right? How was your first year as a full-time trader? It was fucking scary. But it was fun. So again, upside for foreign currency, potentially potential downside objectives for dollar. That's what makes the stars align, if you will. So people will tell you, you know, oh, CPI is a gamble. And to some degree, they're not wrong. But if it aligns with the higher time frame, if multiple assets are telling you the same thing, that's still high probability. You guys picking up what I'm putting down? Still high probability. Why scary? Can you talk a little bit about it? It's scary because when what was it, Office Depot, when I quit that dog shit of a job and went into trading full time, and that was when I had just entered the MLM industry as well. So, and I was like, in that industry, I was in there for like 2 years before I ever became an educator. But it's scary because a portion of the income has been taken away, right? So you essentially, if you lose one of your sources of income, that can be a scary thing. So that's why. But I've always been the type of guy to bet on myself. So even when other people don't. And I can tell you, it's paid off. And I'll leave it at that. We talked about how this could potentially be a stop run to go lower. What would confirm that? Is there anything that we could look at to confirm whether this would be a stop run or just a continuation higher? What can we look at? If we're looking at the dollar index, what else can we look at? 3 higher highs, says Toby. I mean, I don't know about that. I mean, I guess you're kind of right. One here, one here, one here. I didn't look at it that way, but I'll allow it. I will allow it. Felix says EU. Naruto says Euro. Magma says the bonds. The bonds actually a really good answer. Not what I was looking for, but you're not wrong. The answer I was looking for was either Euro. That would be acceptable. If we are going to look at Euro, then we could look at British pound as well. So I would take either Fiber Euro USD or Cable GBP USD as an acceptable answer. Okay. So keep this in mind. May 30th, June 11th. All right. What did we say? May 30th. Hold on. I should have fucking wrote this down. I didn't write it down, chat. May 9th. May 9th. Okay. I think that's right. Yeah. Okay. No, never mind. I thought I was wrong for a second. May 9th to June 11th is a lower dollar. May 9th to June 11th is also a lower euro. Why is that? bodies, same shit. Right? So if the euro is lower on June 11th, why is the dollar not higher? Well, John, the euro is the inverse of the dollar index. That's what everybody says. Is it? Is it really the opposite, though? In the majority sense, sure. But then why are they doing the same shit? They're breaking out of correlation. Okay? So with the euro, USD, trading lower here, that is an indication of a stop run on euro. What's British pound doing on June? What day was that? This was the 11th. June 11th is here for pound. Pound is not going lower. How do you know if it's manipulation? How do you know if that's manipulation? I just gave it to you. You can compare euro to the dollar index. You can compare it to British pound. They don't align. They don't align at all. The euro trading lower. Pound slightly lower, sure, on Friday, but we never made lower lows. We traded higher instead. So foreign currency is being accumulated. You can see that in price. Foreign currency accumulation. What about Australian dollar? Okay, look at the lows. Look at all the daily lows in here. Let me just take everything off now so we can clean this up a little bit. Look at all the lows in here. Look at New Zealand. You see anything there? You see, let's go to Aussie one more time. So Aussie makes a low on May 30th. Okay. And we have a lower, that looks like, that closes horrendous, but whatever. That's a lower low on Australian dollar, right? Aussie and Kiwi, they correlate though. Do they? Do they correlate though? They do. But it's not step for step. It's not locked in like that. It's a loose correlation. It's a strong correlation that's not perfect. Do you understand? Because money shifts, right? Money does not stay in one place for a long period of time, unless you're Warren Buffett. He's a different breed. That's its own conversation. Money, as in smart money, all right, or even like hedge funds and stuff like that, which are not actual smart money. Again, that's a different conversation. But I haven't talked about this in a long time. It's very easy. And this is one thing that one of my good friends taught me too, which is where the orange box comes from, by the way. Money does not stay in one place. Okay, money shifts. It goes into assets, out of assets, into other things. So when we talk about currencies, money shifts all the time. It does not stay in one place forever. All right? Especially in currencies, all right? Money, if you're not writing this down, you're fucking up big time. Money chases yield. Okay? Money, capital, funds chases yield. Money never sleeps. Nice. It's the same thing, just put in a different way. Money does not stay parked. Okay? Is there not evidence of that though? If we have a lower Australian dollar, why do we have a higher New Zealand? If it's a heavy correlation, right? Why don't they do the same thing? Because remember, what's the framework? That screenshot that I took on May 4th, that was a Saturday. Again, that's posted online, the before and the after. I was bullish since that day in here, right? Well, not the Friday, the Saturday leading up to between that Friday and that Monday. I'm saying from here, I am bullish, right? New Zealand is under accumulation. What is it going to reach for? Well, between 0.6, it's a 6, it's a 0 level. I don't know why that was highlighted. That's weird. Okay. From 6, I'm bullish until at least what? At a minimum, 62.18. That's 200 pips. 218 pips. Right? Smart money is not going to buy on a fucking Wednesday and Thursday and sell everything on Friday. We might do that. Real smart money's not doing that. Not with their full capital anyway. You think they're going to take one, or so what I said one. You think they're going to take like 10, 20 pips out of the market? We can do that as like day traders, swing traders, whatever. But real money, like money you'll never see. Money I'll never see either. Money you and I can't even fathom sitting in some account somewhere. That, again, we'll never have access to it. But I'm trying to make a point. Just money that could buy damn near fucking countries, okay? That money's not going to be in there buying on Tuesday, Wednesday, selling on Friday. They're not going to get 10, 20 pips. They're going to get full penny moves. You understand? And even beyond that. Because again, from 0.6 to 0.62, on paper, that doesn't sound like a lot, right? 0.6 to 0.62 doesn't sound like a lot. But with the amount of money that's in there and this, you know, to where we are now, that right there, that's what makes real money, big money. Okay. So I'm not usually a position trader like that. Especially like with swap, because that's kind of annoying, especially when price does this kind of bullshit. But that's the difference though. That's the difference between how retail trades, we're all retail traders, and the way that long-term smart money trades with positions. Because they're not really too worried about a couple of days that are sideways, right? They don't care. They're not thinking like that. They're not thinking in terms of hours or days. They're thinking in terms of weeks or months, possibly years. Do you understand? So how can I say with confidence, right? Because everybody says, don't trade CPI. It's gambling. And again, I want to make this clear. To a point, to a certain extent, there is truth to that. But to outright say it's a gamble, I don't know, Chief. Because remember, we've already been bullish. That was established weeks ago. So we see accumulation on Monday, on Tuesday. And obviously this morning, today too. We don't have a lower New Zealand. We have a lower Australian dollar though. Because the stronger asset, even though Aussie's up a higher percentage today, but you know, whatever. Price action wise, New Zealand's under accumulation. And we see that, and that target was met. Right? And I'm not trying to brag, bro, but just listen to me for a second. If I didn't know this kind of shit, okay, I would come on here and be wrong all the time. Or I'd be wrong like half the time. I'd be right half the time, wrong half the time. I did get it wrong on Monday. We wanted higher indices, what, Tuesday, right? Did we not fly higher? We've been looking at 62.18 for New Zealand. Did we not get that today? It's not difficult. All right. The difficult part is the patience to wait for setups and the patience to hold trades and the patience not to move your stop instantly to break even right after, you know, it goes your direction for like 2 points, shit like that. But when you understand what smart money is actually doing, not smart money is in like, you know, the 5-minute setups and shit. I mean, oh, I love that. I love that stuff, like the little 5-minute mitigations and stuff. That's fine. Actually, we do need to check on index futures for a minute. I do need to see what's happening over here. Price is fractal, okay? So if you understand that the higher time frame, especially for New Zealand, is bullish, then almost every single day you can understand that you're being backed by the capital that I talked to you about earlier. Billions of dollars is behind you. If you understand that, it's a lot easier to trade those little 0.1s or those fucking 0.5s, maybe even a standard lot if you're not there yet. You're worried about a half lot or a standard lot when you've got billions of fucking dollars behind you. You see kind of how like silly that is, how irrational that is? We're pennies in the ocean, dude, or like drop in a spit in the bucket or in the ocean, right? Like we are so small, you know? That's what gives me confidence to actually take trades or like give you a bias, for example. A little bit earlier in the Discord, I talked about how we have a bull flag up here, and I said that's pretty suspicious for the Nasdaq, right? I don't know if you looked at it, but I was like, hey, we have a little bull flag here. I'm like, that's suspicious, right? We're at all-time highs, 475. There might be some option contracts that we might have like a bunch of options activity up here around the 745 level, especially for this week. So the move for CPI gave us that gap, but I don't think we're going to stay up here. It would sort of make sense for CPI to run it up and then for FOMC to bring it back down. Let everybody have their euphoria right now, right? We were trying to long yesterday, right? We were trying to long. Well, I was trying to long. I got broke even back down in here, right? Now, if I wasn't if I didn't get knocked out prematurely, and if I held one contract, you don't think I'd have euphoria right now? Or you don't think most people would have euphoria from being in at 53.50s and it's at 54.40? Like 90 points on the S&P? You don't think that would be euphoric? Because it probably would be. And so I feel like anyone, you know, feels like they're the man right now. Right? And I feel like they're just going to say, okay, we'll let you have it for now. And then we're going to absolutely demolish that in the same day. So look, I could be wrong. Okay. I could totally be wrong. I don't have any futures positions open at the moment. I don't have any futures positions. I do have a small short on the triple Qs though. So full disclosure there. But the play is so small, it's not like if we fly higher, it's going to be laughable. So I don't know what we're going to do. If you're looking to take a trade prior to FOMC Fed funds rate, I would not recommend that. But if I had to pick a direction, I would say lower. Let me put it to you clearly. If you're not in a trade, don't take a trade. If I had to pick a direction, though, for the rest of the day, I would think lower. Okay? That's where my thought is at. So this almost looks like a stop run, and there's a little gap right there. But again, my eyes are on the triple Qs. Okay? Why would I go with that? Well, again, I'm thinking about the futures that are going to expire on Friday. And we just have some lows down here. Like, that's literally it. There's nothing else that gives me confidence to come in here and short. Just a small bull flag, some low resistant lows, and that's it. So there's not a lot that's backing up this idea for shorts, in other words. Okay, so that's what I'm looking at. What's good, Roy? When are you gonna grab a membership, Roy? That's my question. Is the chat gonna be able to bully Roy into getting a membership? I don't know. We'll see if the peer pressure works. What's good, Grobert? What up? What up? So, for those of you that have not been on, we have Fed funds rate in about 20 minutes, 21 minutes or so. And then 30 minutes after that is the press conference. So I think it's going to be a wild afternoon. If we don't get a lot of volatility, I'll probably be a little bit surprised. I'm expecting high volatility. Yeah, Toby, tell him. Tell him, say, come on, Roy. Membership. Anyway, so let's briefly go over what we talked about. Dollar index, right? Understanding that CPI is somewhat predictable. And, you know, I already told you in advance that we had one scenario here. I did say yesterday or the day before, I was like, it's kind of low probability because it could go either way. But if you do a thorough analysis, probabilities are lower. Okay. So understanding that we have a lower dollar here, right? But then simultaneously, we also had a lower euro. So that's manipulation. And if they're going to manipulate a low, right? And if Aussie has an upside target and manipulation as well, New Zealand has a high probability target and accumulation, all roads lead to a lower dollar. All roads lead to a lower dollar. SMS community going to set you on fire? Damn, Toby. When did we become violent? I don't know if the Stoics would agree, but I'll take the energy though. What would happen with gold when the Fed would decrease the yields for a few percent? Honestly, I don't know. That's a good question. I don't know the answer to that. I think gold sort of does whatever it wants to do. Interest rates or not, I think it just does whatever it wants. So I couldn't tell you. I have a lot of markups on here though. We need to get rid of all that. Silver as well. So silver disappointed me on Friday. It was down like 6%. I wanted to cry so bad. It was bonkers. I still don't think we're done though, because we did leave low resistance highs up here on the 1 hour time frame. We might have made a high for a long time, but I don't think we're entirely bearish for silver or for the metals, period. Especially if we get a continuation lower for the dollar, that might help push the metals higher, maybe indices too, but we'll see. You want to be my wingman for clubbing? Bro, I haven't been to the club in like 10 years. I don't go clubbing. I don't do that shit. We can go to the taco truck though. We can go get some tacos. If the menu is in Spanish, oh yeah. Yeah, we're going. We are going. Gotta be. Gotta be. If it's parked at a fucking gas station on the corner, oh yeah, we're going. We're hitting that up big time. Cash only? Oh yeah, we're going. We're going. Alex said the taco truck outside the club hits different. Well, that's probably because you've had some alcohol too, but I don't know, man. What was I even talking about? Dollar index. Yeah. Use like, okay, having the dollar index, right? And then it had an upside objective, but it also had a downside objective. But looking at the currencies on an individual basis, don't lose me here, chat. Currencies individually pointed higher. So that tips the scales for the dollar to go lower. Does that make sense? So you have to really think about that. Is CPI really a gamble though? Is it really a gamble? You know, we each do things how we want, you know? So I'll leave that up for you to decide. All right, let me talk about Dow for a minute too. I was gonna trade this and I didn't, and well, I pretty much finessed myself out of shorts today. So, you know what's interesting? So yesterday, I brought up the fact that we have, or whatever we were looking at had triple highs, right? Like the high, the second high, and then the third higher high. And I said sometimes you'll see like 4 highs, and if you back test it, you'll find it, right? And that's pretty funny because that's exactly what we got today on Dow Jones. Look at this. Right? 1 high, 2 highs, 3 highs, and then that 4th high right there. You see that? Now, why would we do that? To me, the CPI high, I'm going to tell you, it counts, obviously, because it's printed and it's in price. But if that's a news event and it's like heavy manipulation, to me, that's not going to count. So that same formation is still here though. Okay. And the difference is equities is here. Right? Because sometimes you guys still ask me if I trade pre-market, and I don't. I did like 1 time earlier this year, and I haven't done it since then. So typically no. Okay. So if you wait for equities and it drops down, that's what gives you your formation there, not the 3 here. And this is what, I don't know if it was Natasha or somebody had posted this in the Discord, and I think either they use these 3 or like this one, and this one. But the problem is you got to look at the legs, right? You got to look at the legs. Look at this retracement here, and then look at this retracement here. There's a very big difference between the two, right? Now, normally I would tell you, you know, we would talk shit about break of structure, but to be fair, I guess we'll use it. This low was not taken here. It trades a little bit lower off the high, but it never makes a lower low. This one does. Violently. Big difference. So that's why, like, if you took something like that, oh, there's that 3 high formation, we have an imbalance here, oh, I might take that. Yeah, but equities comes along and then drops. So what I did is I screenshotted this as if I was going to take it. And I didn't. Okay, I didn't take it. I screenshotted it as if I was going to. I screenshotted that right there. And my target was those lows right there. Boom. That would have been it. Right? And that's what that looks like for the day. Now we're pretty much below CPI's low for the Dow Jones. So that was interesting. It's a very good study, by the way. Lasco says, I see that pattern like a sweep of the extremes of events. Yeah. Well, because they're important. Somebody was long in here, or they longed it on the way up, and they just got stopped out, probably, if their stop loss was here. I said that earlier in the Discord kind of as a joke. I didn't mean it to any specific asset, but I posted a picture of the thumbnail, which is Powell, and I said, he's coming for your stop loss. And so we see that here on Dow, which is kind of funny. But yeah, so why wouldn't I trade something like that? Obviously, that was a banger. Well, in hindsight, yeah, it was. Because at the time, at 840, you got to realize 840 ES was printing a solid up candle in the 5-minute. NQ, same thing. 840 was printing higher. And it took a short-term low. So I'm like, oh, well, I'm not going to short that with Dow. So I let it go. You know, like when you fish, and sometimes you catch a fish and you just let it go. You throw it back in the lake, or you throw it back in the ocean. You know, it is what it is. Oh, it was Natasha? Okay. Not that I'm trying to call you out. I'm just saying. I'm trying to work on my memory skills. So, but yeah, so hopefully you got some value out of that. Okay. Anyways, we have 10 minutes until Fed funds rate, FOMC statement. So we got 10 minutes, chat. What do you want to do? Alex, you're banned. You're banned. You and Cameron are banned. Cameron said clubbing is low-key feminine. Kind of. I mean, I guess so. I haven't been in so long. I just don't see the point, bro. I'm just not cool, man. I'm fucking 30 years old, bro. What do you want from me? I'm not hip and young. I'm an old geezer now, dude. 30 years old. Imagine that. Let me see. Also on the spike, a lot of people probably were selling that spike, putting their stop loss above that. And after the sweep and break, it's time to go the opposite extreme. Makes sense to me. My next book will be the new one of Ryan Holiday, which is Right Thing Right Now, baby. Oh, yeah. I am about a third of the way through. I want to be finished probably. It won't be today, probably, but I'll probably be finished by Saturday. I want to make a video review for Amazon. What's wrong with being in your 30s? Willow, when was the last time you went to the club, my friend? When was the last time Willow went to the club? Cameron said, let's go dance. I don't dance, bro. I don't dance. I would rather do anything else on earth than to dance. So bucket hat makes you look hip. Thanks. I'm trying to just look like a sniper, dog. I got the green army shirt on. I got the bucket hat. Targets have been hit. Like, there's a gold sniper on your screen too. Like, what more can I do? Yeah, well, that's my point. You can't even remember because it's been so long, bro. We're old, man. It's okay. Just face it, bro. Just face it. We're old, bro. It's okay. It's all right. It's okay. We'll be old, man. We'll be old. Last time I went to a club, I was 18. Now I'm 25. I feel old for this thing. Clubbing brings negative Matrix vibes. Yeah, dude. Almost nothing good happens at the club, especially after midnight. Almost nothing good happens after midnight. Almost nothing, dude. I ain't gonna tell you stories that, you know, I ain't gonna tell you some stories, but I just know that a lot of bad things happen after midnight. You know, police roaming the streets looking for drunk drivers and shit. I mean, well, that by itself's not terrible, but you know, they be lurking, dude. They be lurking for real. Just not a good place. It's not where you want to be. What's good, Electric? It's much better to read a book instead of all that other shit. Nah, I agree. I agree. If it's a good book, at least. I think Right Thing Right Now is probably his best work so far. Stillness is the Keys was pretty impressive, though. But in terms of style, it's very good. Readability is very good. The references are pretty solid too. And they're not like too long. The first chapter was very long, but then, or it might have been the introduction, but the other chapters really nice, just short, sweet, to the point. It's a good book about justice, doing the right thing. Choose your enemies wisely. Yeah, I've got that one too. Fun fact, I actually hit up Greg Dinkin, whatever. I think it's page 22. They misquote Seneca. They attributed a quote to Marcus Aurelius that wasn't his. Yeah, page 22, second paragraph. And actually, it wasn't even Seneca. It wasn't Lucilius. It was another person that was writing to Seneca, and he said that. So I was wrong too. But I hit him up. I was like, Marcus Aurelius didn't say that. He was like, oh shit, okay. He said we'll fix it for the paper copy. I didn't email him back. I'm just like, okay. So yeah, he got that wrong. But still a pretty good book, though. I like Patrick Bet-David. I think he's cool. I think he's a good guy. I think your first, your first 5 move or your next 5 moves, the blue one, that was a really good book. That was a really solid piece of work from Patrick Bet-David. Willow said, I got roofied on my 21st and ended up getting locked up that night. Killed the whole vibe for me with the bar/club scene. Wasn't long till I found my first MLM. God works in funny ways. Yeah, I agree. Have you read the books, or have you read books about the Rockefeller story? No, I haven't, dude. I have not. Should I? I got a lot to read, though, bro. I really have to stop buying books. I have bought in so many. I just ordered like 3 more the other day. Autobiographies, actually. So when you read autobiographical copy of Meditations. So I was like, oh, I find that interesting. I never knew that. So it's cool. I think the Elon Musk biography is pretty good. Read it 3 times. Oh, nice. I've looked into getting that one, but I haven't done it. I've looked into it, but have not done it. So about 2 minutes, and then we'll see if we get initial volatility. We'll see if we cover any inefficient price action from CPI, or we massively go higher and I'm just wrong. But if I'm wrong, I won't lose a lot. I won't lose a lot. Observing gold, says Josh, in the daily mitigation. I see what you're looking at. High, low, higher, high. We ripped through that, and you're looking at this. I don't know. I'm biased because I have physical silver. I'd rather see higher metals. So I'm going to stick to that. Silver, I don't even think has, oh no, it does kind of have the same formation. Not really. Never mind. I don't know. I do not know, my friend. So we'll see. We shall see. You're just watching? Yeah. I wonder. No, I didn't hit that yet. Okay. Yeah. We'll find out, chat. Are you guys in any trades or holding any trades? That was a nasty spike lower. S&P, a little bit of a spike there. Dow probably definitely cleared out anything that was remaining below these lows. No, just watching. Donkey knocked out, break even on silver short, sitting on hands. Dave is short on NQ. Alex caught the SPX sell. Felix holding 20% from 39.08. Yeah, so SPY took the morning session low the last minute. The triple Qs did not trade to the gap here. That's interesting. But this low, let me see. That low, that low and that low all just got cleared. And traded right to the lower end of that imbalance. I wouldn't base the rest of the day off of that. But that definitely looks like manipulation. Like big time. Heavy manipulation. The smell of violence in the PM session. Yeah, let's check the metals too, real quick. See if they got the same level of, well, it's a little bit of volatility. Yeah, I don't know. I guess we'll just keep it to a 5-minute. We'll give it a few candles, kind of see what it wants to do, and then if we stick around long enough, we can probably tune into the FOMC statement from Powell and see if the volatility continues. So, what do you guys think? Do you think we will not be volatile, or do you think we'll see like a little bit of movement? What are your thoughts? I'm almost wondering if they take it higher to clear out anyone who's short and just try and clear the whole board, just wipe the whole board. You know, like, you ever seen one of those videos where somebody's about to lose in chess, so they just flip the board? That could be on the table too. They could clear they could clear out everybody, like a SWAT team, just busting in a building and just clearing out every room. Throw a flashbang in, busting in through the window, and just some real Counter-Strike shit, you know? Volatile. Josh says, I think as soon as he says hello, the market will move a bit more clear. More retail traders. Hee. It's possible. I want to look at the highs for a second. Oh, these, yeah. I don't think one of them went higher as the others went lower. I don't really see that in here either. No, not really. Okay. On a small time frame, this did. 1 is here, and Nasdaq kind of spiked above that right there. And the S&P doesn't make a higher high right there. I don't know if that's going to mean anything. So 20, 23, maybe 24 minutes until he speaks. Oh shit, we didn't look at the dollar. You guys didn't let me look at the dollar. So we traded higher a little bit. We didn't come down to clear these lows. Let's see. So that means foreign currency probably took a retracement. Yeah, so we see New Zealand trade a little bit lower. Australian a little bit lower. Let me see. I don't think this is going to mean anything, but it did trade into that. Almost. I don't know. And then euro. So you know what's interesting, and we typically don't talk about this. What's interesting about euro, we understand this was manipulation down here. Like we know that by now. I didn't really talk about this gap either. And we do have low resistance highs up here, or maybe even equal highs up here. I'm almost wondering if we should trade lower to offer sell side price delivery in that gap, because we don't have sell side or buy side in the gap, right? But we do get buy side delivery here. I'm wondering if we should come back into it to offer, again, sell side delivery and then take that bitch up here. And that would almost be like a second leg model too. I'm wondering. That might be a thing. Josh is watching the same gap. Yeah, it's just Friday to Sunday's gap. Like 20. Oh, is that 20 pips? Yeah, about 20. Okay. Interesting enough. All right. Let me just go back to Nasdaq and see what takes place. I'm not watching anything specific in here. Like there's a lot of gyration. There's a lot of like up, down, up, down. I'm just watching to see what we do. I wouldn't trade this. It's just something I'm looking at. That's it. I'm just looking at it. Right there. So. Lasco is short on AU. Short on Aussie, huh? Let's take a look. It's a lot of gyration in here too. This is obviously hindsight, but one high, two highs, three highs. It does drop down a little bit, leaves behind an imbalance, which it trades into right before our session started. That's interesting. I had really no interest in shorting foreign currencies today. But it's offered about 20 pips or so from there. Just made a new low earlier. Yeah, same thing. New Zealand traded lower there too. You see that lower high here? Like look where Australian dollar made its high, 1105, and 1105 New Zealand slightly lower. So it just looks like short-term distribution. That wouldn't be bad. Miguel wants to long S&P, huh? You want a long ES, do you? Do you? My only question for longs, okay? Like let's make the argument, all right, stop, run to go higher. What exactly is the upside objective? Honest question. What would it be? Would it be these highs? 54.48? Oh, nice, Lasco. That's a nice job. Very low risk on that, I would think. I don't know where your stop was at, but if it was at that high or just above it, that was very low risk, which is good. So yeah, they all traded into their respective imbalance on just on a 5-minute time frame, nothing crazy. And again, I'm not saying to short that. I'm just watching it. So not bad for the first 15 minutes. You guys got any questions? There's like 60 of you on here, but I really don't have anything else for you. Not for another 15 minutes. You guys chilling or what? What are y'all doing? Josh said working. Capitalist is eating. I'll probably eat after the stream. I got some chicken that I need to cook. I think it's like lemon pepper, I think. I gotta cook that. Yeah, Natasha, I agree. I struggle with that sometimes too. You're not the only one. The market's designed to do that. That's why, like, when I think it was yesterday, and I talked about multiple models, right? Being able to buy below old lows, long the next candle entry, you can long the mitigation. Like, there's so many opportunities, right? And it's those type of entries, that's what gets you out beforehand. You know what I mean? That's why the market does that. You pushed your stop too early, So where you got out, someone else got in, and then the market went where you thought it was going to go. That's why sometimes, like, this is just hypothetical, but like say this high, for example, if you wanted to be bearish and then shorted above that, to go lower, not bad, right? But someone was short up here, the market went lower, and then they put their stop at the high and then got knocked out, right? So it's the same idea, just depending upon whatever time frame you're trading. Yeah, nothing too outrageous yet. Jay Jones is working as well. How can you guys watch a stream if you're at work? Are you at work? Do you work from home? Like, what's going on? Is it your lunch break? Like, what's happening? What happened, capitalist? What's so funny? What did I miss? John said, I'm just good at looking busy. What is wrong with you guys? You all need to go read Right Thing right now. We need to learn some justice, man. We need to learn some justice. Lee Bright used to put his phone in a small box, not even a camera could see it. That's crazy. So that imbalance here, that was just traded through. Yeah, if I shorted that, I would not stay in that. And then I think ES just gave us like triple highs. $54.41 1, 2, 3 times. So that's always nice. That's always nice seeing that. Marshall finished work, just chilling. Magma said it's 8 p.m. where I'm at, so I watch your live stream just before I go to bed. Oh, nice. Very nice. Daniel said USD CAD. Ugh. Loony? You got to be loony to trade loony. You know what I mean? You got to be like, I don't know. Like, look at it. Look at this. A friend of mine pointed out these lows the other day. Traded into that. Okay. CPI dropped us lower. We don't take anything. We trade back up and then right back down again. This looks horrible. What on earth is this price action? Can't do it, dog. Can't do it. What is that supposed to reach for? I think if I was in from up here, longer term, I would probably expect this down here. I'd probably feel pretty decent if I was short seeing a candle like that, but it's been a long time since I've traded this either. I guess that would probably go in suit with dollar going lower as well. So I guess that's a possibility. I guess that's a possibility. So that looks like a inverted 5-minute imbalance. I'm wondering. All right, let me pause the music. The Fed is live. Let me drop the link. Well, they're playing like the intro music. I'll drop the link if you guys want to look at it. That is the YouTube channel that they are streaming from. So yeah, that'll be in about 5 minutes from now. Oof. Their music is almost as bad as Powell is, to be honest. Oh heavens. Oh heavens, chat. But you know what, Magma? I don't know if you're still here, but if you have insomnia or if you need help going to sleep, just listen to Powell. You'll probably be out like 10 minutes. 10 minutes, dude, and you're done. Economic policy. Slump. Slumped. Dude, every time without fail, bro. He's not a fun guy to listen to. Hopefully people don't think I'm boring. I mean, maybe. That's always a possibility. Dude, could you imagine if I ran the Fed? Like if I was the speaker for the Fed? Good morning, everyone. You're fucked. You know? Screw your puts and your calls. Imagine if I came out in a ghillie suit at the Fed Reserve. Oh, yeah. Oh, yeah. I think that would make a lot more people pay attention to monetary policy. For real. Fed Chairman John Fibonacci shows up to press conference wearing this, you know, like all the headlines. Yeah, that looks like an inversion almost. Just kind of a little bit sloppy though. That and that's not a lot of points either. No, capitalist, I haven't. I have not. Matter of fact, I think that's the first time anybody's ever asked me that. So there's 41 or 54.41. Sorry. There's the triple highs. Met again. The 5-minute was respected a little bit. But it was the Nasdaq who traded through, and then I said that looks like an inversion. And it became an inversion, which is kind of cool. And so yeah, S&P, even though it respected that, that's just kind of a brief look on how we created the high, small retracement, and then launched up there. But yeah, it was Nasdaq who had the inverse there. Yeah, so now I'm wondering if they're gonna bring it up here and clear everybody. Clear everybody out. Tell them, get them out of here. You'd like to go on a workshop or something like this? What do you mean, capitalist? Like we all show up to a big room with laptops and shit? Dude, I reached out to someone in Houston a couple days ago and they left me on red. And then I reached out to another person about social media like 2 months ago and they left me on red too. I'm just like, damn. What the fuck? People don't like me, I guess. Oh, all right, he's out here.
Good afternoon. My colleagues and I remain squarely focused on achieving our dual mandate goals of maximum employment and stable prices for the benefit of the American people. Our economy has made considerable progress toward both goals over the past 2 years. The labor market has come into better balance with continued strong job gains and a low unemployment rate. Inflation has eased substantially from a peak of 7% to 2.7%, but is still too high. We are strongly committed to returning inflation to our 2% goal in support of a strong economy that benefits everyone. Today, the FOMC decided to leave our policy interest rate unchanged and to continue to reduce our securities holdings. We are maintaining our restrictive stance of monetary policy in order to keep demand in line with supply and reduce inflationary pressures. I'll have more to say about monetary policy after briefly reviewing economic developments. Recent indicators suggest that economic activity has continued to expand at a solid pace. Although GDP growth moderated from 3.4% in the fourth quarter of last year to 1.3% in the first quarter, private domestic final purchases, which excludes inventory investment, government spending, and net exports, and usually sends a clearer signal on underlying demand, grew at 2.8% in the first quarter, nearly as strong as the second half of 2023. Growth of consumer spending has slowed from last year's robust pace, but remains solid. And investment in equipment and intangibles has picked up from its anemic pace last year. Improving supply conditions have supported resilient demand and the strong performance of the U.S. economy over the past year. In our summary of economic projections, committee participants generally expect GDP growth to slow from last year's pace, with a median projection of 2.1% this year and 2.0% over the next 2 years. In the labor market, supply and demand conditions have come into better balance. Payroll job gains averaged 218,000 jobs per month in April and May, a pace that is still strong, but a bit below that seen in the first quarter. The unemployment rate ticked up, but remains low at 4%. Strong job creation over the past couple of years has been accompanied by an increase in the supply of workers, reflecting increases in participation among individuals aged 25 to 54 years and a continued strong pace of immigration. Nominal wage growth has eased over the past year, and the jobs to workers gap has narrowed. Overall, a broad set of indicators suggests that conditions in the labor market have returned to about where they stood on the eve of the pandemic, relatively tight but not overheated. FOMC participants expect labor market strength to continue. The median unemployment rate projection in the SEP is 4.0% at the end of this year and 4.2% at the end of next year. Inflation has eased notably over the past 2 years, but remains above our longer-run goal of 2%. Total PCE prices rose 2.7% over the 12 months ending in April. Excluding the volatile food and energy categories, core PCE prices rose 2.8%. The Consumer Price Index, which came out this morning and tends to run higher than the PCE price index, rose 3.3% over the 12 months ending in May, and the core CPI rose 3.4%. The inflation data received earlier this year were higher than expected, though more recent monthly readings have eased somewhat. Longer-term inflation expectations appear to remain well anchored, as reflected in a broad range of surveys of households and businesses and forecasters, as well as measures from financial markets. The median projection in the SEP for total PCE inflation is 2.6% this year, 2.3% next year, and 2.0% in 2026. My colleagues and I are acutely aware that high inflation imposes significant hardship as it erodes purchasing power, especially for those least able to meet the higher costs of essentials like food, housing, and transportation. Our monetary policy actions are guided by our dual mandate to promote maximum employment and stable prices for the American people. In support of these goals, the committee decided at today's meeting to maintain the target range for the federal funds rate at 5.25% to 5.5%, and to continue reducing our securities holdings. As labor market tightness has eased and inflation has declined over the past year, the risks to achieving our employment and inflation goals have moved toward better balance. The economic outlook is uncertain, however, and we remain highly attentive to inflation risks. We've stated that we do not expect it will be appropriate to reduce the target range for the federal funds rate until we have gained greater confidence that inflation is moving sustainably toward 2%. So far this year, the data have not given us that greater confidence. The most recent inflation readings have been more favorable than earlier in the year, however, and there has been modest further progress toward our inflation objective. We'll need to see more good data to bolster our confidence that inflation is moving sustainably toward 2%. We know that reducing policy restraint too soon, or too much, could result in a reversal of the progress that we've seen on inflation. At the same time, reducing policy restraint too late or too little could unduly weaken economic activity and employment. In considering any adjustments to the target range for the federal funds rate, the committee will carefully assess incoming data, the evolving outlook, and the balance of risks. In our SEP, FOMC participants wrote down their individual assessments of an appropriate path for the federal funds rate, based on what each participant judges to be the most likely scenario going forward. If the economy evolves as expected, the median participant projects that the appropriate level of the federal funds rate will be 5.1% at the end of this year, 4.1% at the end of 2025, and 3.1% at the end of 2026. But these projections are not a committee plan or any kind of a decision. As the economy evolves, assessments of the appropriate policy path will adjust in order to best promote our maximum employment and price stability goals. If the economy remains solid and inflation persists, we're prepared to maintain the current target range for the federal funds rate as long as appropriate. If the labor market were to weaken unexpectedly, or if inflation were to fall more quickly than anticipated, we're prepared to respond. Policy is well positioned to deal with the risks and uncertainties that we face in pursuing both sides of our dual mandate. We'll continue to make our decisions meeting by meeting based on the totality of the data and its implications for the outlook and the balance of risks. The Fed has been assigned two goals for monetary policy: maximum employment and stable prices. We remain committed to bringing inflation back down to our 2% goal and to keeping longer-term inflation expectations well anchored. Restoring price stability is essential to achieving maximum employment and stable prices over the long run. Our success in delivering on these goals matters to all Americans. We understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you, and I look forward to your questions.
Thank you, Mr. Chairman. Steve Leisman, CNBC. Just wondering if you could walk me through the committee's average inflation forecast. Core PCE is now forecast to be 2.8% by the...
All right, blah, 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 blah. We'll come back to that in a minute. I told you guys that shit was boring, right? It is. So anyway, I'm looking to see what's going on, right? Are the indices going to run up to clear out anyone who's short? This was volatile, man. But this looks like they want to jam it up here into the 50s or the 60s. That's what that looks like. And then I didn't cycle through the indices in front of you because I wanted to actually watch it, but just trying to see, if there was anything significant. So far, just getting really some whipsaw here across the board. Yeah. What do you guys think? Even though this was super volatile, yeah, it did respect that inverted imbalance, but I wouldn't trust it. I wouldn't trust it.
It's a forecast, a fairly conservative forecast month by month that would lead to slightly higher 12 months rates by the end of the year. If we get, better ratings than that, then you will see that come down or remain the same. If you're at 2.6, 2.7, that's a really good place to be.
Nick Tamarosa, the Wall Street Journal. Chair Powell, if I look at the rate projections, I see 15 of the 19 that are anticipating either one or two cuts this year, fairly evenly split between the two. And so I wonder if you could explain a little bit more the nuances or the differences there. Would 2 or 3 more inflation readings, like the one that we saw this morning, make a September interest rate cut possible?
So as far as the SEP part of that is concerned, as you know, I talk to all of the other participants on the FOMC every cycle, and we talk about their summary of economic projections and the their dot plot and everything. And what I hear and see is that people are looking at a range of plausible outcomes, and in many cases they're they're thinking, I don't really, I can't really distinguish between two of these. They're so close for me. These are very close calls. But we asked them to write down the most likely one, so they do. And I think as you've said, there's 15 of the 19 are kind of clustered around one or two. So I think I would look at all. I look at all of them as plausible, but I'd look at so I think that does tell you kind of what the committee thinks. But what everyone agrees on is it's going to be data dependent. No one brings to this or takes away from it, that is on the committee, a really strong commitment to a particular rate path. It's actually just their forecast, and it's a combination of their forecast and their own reaction function. But again, everyone would say that this is very data dependent, and I don't hold it with high confidence. And I think if you're looking for and don't really think that they're not trying to send a strong signal that this is what I think is the right thing. It's just what they think at a given moment in time, subject to data. In terms of future meetings, we haven't, we don't make decisions about future meetings until we get there. I think in terms of what we need to see, I mentioned it earlier, we want to gain further confidence. Certainly, more good inflation readings will help with that. I'm not going to be specific about how many because, really it's going to be not just the inflation readings, it's going to be the totality of the data. What's happening in the labor market, what's happening with the balance of risks, what's happening.
All right. Well, anyway, you're more than welcome to listen to him live. Again, I dropped the link if you want to go watch it or listen to it. But I honestly think my time is going to be spent doing something else. So I'll probably read for a little bit. We'll cycle through the indices one more time just to kind of see what's really going on here. We're getting gyrations, right? Like we're getting a lot of back and forth, and it's hard to really see where the market wants to go. In my opinion. I mean, maybe you have a strong opinion. I do not currently have anything. So, we came up for these highs, sure. We fall short of these highs, and now we're seeing more gyration lower. So, I don't know. I think it's a little bit hard to say, but we're also coming up on the final hour too. But yeah, I'll go ahead and cut it here. Well, we've already been here like an hour and 45 minutes. So I'm not going to do anything with this. I'm going to leave it alone. Again, I still have that options play. I'll let that the rest of the afternoon pan out. But yeah, I think I'm just going to cut it here. So you guys be blessed, man. And I will see you again on Friday for the next live session. And then tomorrow on Thursday, I'll put out the next market review. All right. So hopefully you guys were able to learn something from the stream today. Dollar with looking at dollar index and then looking at the foreign currencies to kind of help determine what's going to happen with both of those. And then catching up on New Zealand. That was a target that we had for a few weeks that finally met today. So it's always nice to, see things pan out how you want them to. So go read a book, go touch some grass, or go to sleep if it's the evening time for you. But that is going to be it. Y'all be good, man. And I will see you on Friday.